Hey, good morning. This is Mayor Valensky with Driving Markets. Obviously, anything said on this piece is an opinion only, and I'm not an advisor, not an investment advisor, not a financial advisor, and the money belongs to you. It's in your account. You can withdraw it, etc., etc. Any losses are your decision. Any gains are your decision. So let's get motoring. Wow. So look at the markets yesterday. They shot up dramatically. The Dow was up 2.4%, which was 754 points. In fact, everything across all screens was green. The S&P was up, the Nasdaq was up massively, nearly over 300 points. So what's driving markets, and what is driving those markets to go higher? It's all on expectations that the corporates are going to produce good, solid results. In fact, Netflix came out yesterday with excellent results. It was expecting a loss of subscribers of anywhere between 1.5 and 2 million. And yet they only lost 200,000 subscribers, and now they're expecting to add another 1 million by the end of the year. So all of a sudden Netflix has turned around from an absolute frightened company. Now it's growing into a really solid base and saying, okay, let's get involved in Netflix. What's caused that turnaround? Well, a lot of things that's happening behind the scenes that you're not aware of is that there's a lot of layoffs. So a lot of people are being laid off in the tech sector, and that is also adding or reducing costs and adding profits to the companies. So not only we take Netflix as an example where the subscriber rates have increased, why would the subscriber rates increase at this period of time? Well, there's less people going to restaurants and less people going out and less people going on vacation when they're trying to cut back because of inflation. So therefore you've got more people staying at home, and therefore people are bored, and they're going to likely subscribe to companies and operations like Netflix. So there's a rational explanation. Does that explain the whole market? Would that explain why the whole market has jumped up? Well, I haven't got an absolute reason, because the fundamentals are still the same. We've still got high inflation, rising interest rates, and we've got a supply chain problem, and we've got the war in Ukraine, and we've got now global heating with the UK going into meltdown and fires all over the place at 41.5 degrees. Can you believe that? The UK is at 41.5 degrees. I mean, it's the hottest place on the planet yesterday, which is just mental. Everything is Boris Johnson's left, then the temperatures have just risen. Anyhow, going back to corporate earnings. So Goldman Sachs came out with solid earnings, and Bank of America came out with solid earnings, and all of these are pushing up the enthusiasm of the investors, saying, listen, we've broken out, we've hit the bottom, we're now broken out of this big bear market, we're now going back into the bull market. But in order to have a bull market, you've got to have a lot of liquidity, and the liquidity is not there. And because the liquidity is not there, this could be, and probably is, a very short-lived rise, because not, as I said earlier, nothing has changed. And what you're going to have is rising inflation towards the end of the year. But presently, what the investors have done, they've pushed aside all negative news and said, we don't care about that. We're just going to buy the market. We're going to buy all the shares, and we're going to make a few quid or a few dollars on the earnings season, which is what's happening at the moment. And that's pushed all the indices much, much higher. I talked about a couple of factors. You've got the Google, the CRMs, and Tesla all moved up. Now, Elon Musk does have a problem, because the US court in Delaware said he does have to face charges, and the court case is going to be held in October, and he was trying to delay that and move away and try and break out of the Twitter deal. I do think eventually he will break out the Twitter deal. It'll take a few legal wranglings to do that, and I think Twitter has just got the terrible business model, and I just can see it floating down to $18, $19 a share. Overall, my view on the market is that we're going to go down. I have not changed into a big bull and thinking, yeah, let's go buy the market's going to range forward. No, I think we're at a top of the recent bull run, and I can't see where liquidity is going to come from unless Sleepy Joe Biden and the US Federal Reserve decide to pump in hundreds of billions back into the markets to make it liquid, which is very unlikely, but they could do it. Looking at cryptos, you've got to look at the market leaders there in Bitcoin and Ethereum. Ethereum's jumped up more than 35% since Friday. an amazing jump, and Bitcoin has broken out of the 22,000 level. It's running at 23,000, something like that, 23,500 level, which is an indicator that may move higher. Remember, these are all high risk assets, and there's a lot of FOMO out there, fear of missing out. So a lot of people want to get involved in the cryptos because they're worried that they're going to miss the big next rise. So is Bitcoin going to go back to $68,000? I don't think so. I think there's a major liquidity problem, and I think you have to be very, very careful, because you could see it float all the way down to $10,000 in my opinion. As regards foreign exchange, you've got to look at the dollar. The dollar has been slightly weak over the last few days, only because there's been a pulling out of the dollar and going into higher risk assets, and therefore that's natural that investors sell the dollar and they put money into other assets like in foreign exchange, like the GBP, the pound. Euros moved up above 102, and the Japanese yen. However, the trend on all of them is down. If there's going to be any pound left after the country burns up, we'll see. But the euro is going to go down below 1 to 1 in my opinion, and the dollar yen is going to go to 142. Something to keep an eye on. As regards other factors in the market, you've got UK interest rate decisions out on the 4th of August. I think it's already been priced into the market. And you've got the FOMC, which now investors are saying they're only probably going to increase interest rates by 50 basis points. I don't believe that. I think we're going to go for a 100 basis point increase in the US. And they're not expecting that. If that does come on board, then that's going to shudder markets further. So overall, in my opinion, the market's going to go down. The trend is down with the dollar up. And I think oil also is going to continue climbing. So that's it for today. Mayor Valensky, Driving Markets. Have a good day.